Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight the market found renewed demand for the US dollar as the Federal Reserve held interest rates steady as expected on Wednesday, with Chair Jerome Powell showing no preference for cutting rates at the central bank's next meeting in September. From the comments from the Federal Reserve, the market took a heavy tumble as the US dollar rallied. Fed officials maintained their benchmark policy rate in a range of 4.25 to 4.5 as they weighed how importers, retailers, and consumers will split the cost of the higher tariffs. So, with the dollar index now trading around 99.70, does put a question now on whether the market can actually fall further and the dollar will push into the 100 region. Presently, though, with the 60-day simple moving average broken, the market may find a little bit more to the stop loss side and see a move down towards this region of around 64 cents, which is about 40 pips away. Let's see if the market responds to a slightly bullish manner and maybe see a bounce back towards that 60-day simple moving average around 64.90-95. The euro took heavy casualties overnight after tumbling further to 114, and from where we're sitting now could see a further move to the downside to about 113.5, and before any reversal in the current bearishness. Given that the dollar is close to that 100 mark, I feel we're not too far away from seeing a reversal due to the fact that we are oversold and maybe looking back towards 115.70-80. Well, with the dollar strength, the market has pushed through that 149 level and now looks towards 149.5. I'm a little bit cautious given the fact that the market may actually find a little bit of trouble up at this area, given that this point here to this bearish engulfing candle and where the RSI here is to this bullish engulfing candle may find that the divergence to a bearish case may return. Given the divergence, could see a pullback towards 146 and reassess. Looking to the sterling, there's still bullish divergence when it comes to this pattern here with the RSI and with the MACD. So I'm getting very cautious that we may see a snap to the upside and back towards 133 to 134. Any weakness, I think will be limited today. We'll see how it plays towards 132.10. Gold was even heavier as it takes out the level of 3,300 and now possibly seeing stops triggered down towards 3,250, 60 area before any reversal in the current pattern. But I would say that given the current sell-off, that we're not too far away from a bottom. Finishing up with oil, the rally has continued and is now trading around $69 a barrel. I do, at this point, still maintain my neutral stance, given the fact that we could easily see a sharp reversal at these levels and therefore see a pullback to around $64 a barrel. So I'm neutral for one more day. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report. I hope you enjoyed the great start of the day.